Good morning, everyone. My name is Ariella Wagner. I'm the founder of SunRay Construction Solutions, a national preliminary notice service. Today, we have a fabulous webinar conducted by Alex Barthet. So without further ado, I'd like to introduce Alex Barthet.
Thanks, Ariella. My name is Alex Barthet. I'm a board-certified construction lawyer here in South Florida. Today, I'm going to talk about 3 release tricks you need to know about so that someone doesn't pull the wool over your eyes as you are exchanging a release for a check. So let's run through it quickly of what we're going to go over. We're going to talk about trick number 1, using the wrong form of release. Trick number 2, not using a conditional release. Trick number 3, using the wrong through date on the release. If you have any questions, make sure you use the GoToMeeting chat box. Type them in as you have the question. We will answer all the questions at the end. Make sure not to include any names of people or companies in your questions, please. So with that, let's get started. Using the wrong form of release as the first problem that I see many folks make as they exchange a release for a check. So let's run through a series of releases so you can see what they look like and you're aware of the issues that each release presents. So the first thing you have to be aware of is where you are in the pecking order of a construction project. So if you are the GC, you're going to be looking for different things than if you are a subcontractor. We'll talk about both here in a minute. Generally speaking, you want to give a narrow release when you get a check. So when someone's handing you a check and you're going to give them a release, you'd like that release to release the fewest number of rights possible so that you preserve the greatest number of rights possible. Now, the converse is true. If you are giving a check to somebody and you want them to give you a release, you want them to release anything and everything under the sun so you don't have to worry about that being an issue, any issue showing up later in the course of the construction project. So let's take a look at the basic form of release. That is the release that's found in Florida Statute Chapter 713. So this is a basic release form that's found in the statute. This is a progress payment release form. So let's run through some of its component parts. So number 1 is the amount of money that you're getting. So here you would put in $8,000, $50,000, $500,000. Next is going to be the through date. What is the release date that you are giving up your rights through? Those are the basic components of a progress payment statutory lien release. And all it releases are your lien rights. Notice the very last sentence that says this waiver and release does not cover any retention. So all the retention that you're holding over the course of the job, that's still reserved, or labor, services, or materials furnished after the date specified. So that's why the through date is so important. And we'll talk about that a little bit later. So let's look at a statutory final release payment release. It only has one real section that matters, and that's the amount of money. Again, whether it's $20,000, $50,000, but notice it has no through date, and it doesn't have that last sentence, which has the reservation for retainage and work or materials after the date. And it also has no through date. And the reason is because this release is good through the date you sign it. So if you sign the release today, it's effective as of today. So all of your rights, all of your lien rights are extinguished from today back. If you show up on the job tomorrow, you'll have new lien rights for tomorrow. But at least as far as today back, you will have given them up. If it's dated a week ago, then that's when the release rights are extinguished through. So now this one this release looks very different than the last ones. This is not found in the statute. This release form is what would be considered a custom form of release. And the first thing you'll notice, obviously, is it has a lot more words. And if you are picking up a check and giving a release to get that check, and your release looks like this, and it probably does, you need to read it carefully because you're giving up a lot of other things than just lien rights. So let's talk about each of the component parts. So number one is $10. We'll talk about that later and why that's important. But notice what it is giving up in this release as well. Any and all claims, change orders, works, materials, delays, fees, costs, losses, expenses, damages, or sums for the labor, services, or materials furnished to and for the improvements described below. So notice that the statutory release form only releases your lien rights. This form is releasing anything and everything that you may have as a possible claim. Delays, change orders, any work or materials done, and it's all effective prior to and including the through date. So if you say to yourself, well, this job is running long, I'm going to make a claim at the end of the job for my extended general conditions and overhead, but you're signing releases like this every month, just know that every month when you sign a release like that, like this, you are giving up those rights. You will not be able to assert them later. So it's very important that when you're signing a broad release like this is a broad release, you have to be very careful. If you are a general contractor, this is the form of release that you should be getting from your subs, because you want to know that every time you get them a check, effective through the through date, all their rights go away. If you are a sub and you're getting a check and having to give a release like this, which is not uncommon, it's quite common, you just need to understand what rights you're giving away. So staying on the topic of the form of partial and final release, if you agree to a form of release in your contract, then that's the form that you're bound to accept during the course of the project. So if you're a subcontractor on a project and you sign a contract, and that contract is going to say one of two things about the release. Number one, it's going to say you agree to use the release form that's attached as exhibit, Q on this form on our contract. Because if you agree in your contract that every month you're going to give a partial release on that form, that's the form you have to use. The other way that general contractors or owners get you to sign releases that you may not want to once you actually have to pick up a check is they use words in the contract like, you agree to use the form of release that is deemed acceptable by the general contractor or the owner. So if it attaches a form of release, you need to review it. If they make reference to the fact that you're going to agree to use whatever form I say we're going to use, then you need to identify that as you negotiate your contract and negotiate the form of release that will be part of your contract. So just like you're negotiating other components of the contract, hopefully you are, you want to make sure that you identify the releases and in the contract and change them so that you're not bound to use them later. Okay, trick number two, not using a conditional release form when you are giving a release and you don't have a check yet. So let's talk about what a conditional release is. It is a release on any form, but it has a condition, and that express condition is that it is not effective until you receive the payment that's recited in the document. So the language you could use is, notwithstanding anything to the contrary, this waiver and release is conditioned upon and not effective until the undersigned receives paid funds of, and it has a blank. And you could put in $50,000, $100,000, whatever it is, the check, whatever check you're expecting to receive or money you're expecting to receive, you want to make this release expressly contingent on actually getting the money. The reason this is important is because if you give someone a release that is not contingent on actually receiving the money, and they pass that on, so let's say you're a supplier and you provide an unconditional release, and then you give it to, let's say you're an electrical supply house. You now give that to the electrician, who gives it to the contractor, who gives it to the owner. But you never got your money. You only got maybe an email copy or a fax copy of a check that you thought was coming, but it never arrived. Well, that release is now effective, at least as to the parties up the chain, because they have no reason to know that you didn't get your money. So we have a client right now who's a drywall contractor. He has a contract with a GC who has a contract with an owner. He was promised a check, and based on his long-time relationship with his contractor, he gave a release based on a promise of a check. That check never arrived. So we have now been forced to send a letter to the contractor and the owner saying, you have received a release, and we never received consideration for that release. So therefore, that release is void and unenforceable. We have yet to hear back from the other side, because that letter just went out yesterday, on what position they're going to take. But if they've already funded the contractor based on our release, we're going to be in a tough spot to suggest that the owner didn't have the right to rely on that release. So it's absolutely critical that if you are giving a release without actually getting a check, that you make it conditional. Watch out for releases that are titled conditional, but are not. So sometimes we see a release that says conditional partial release, but then when you read the document, there are no conditions in it. So it needs to specifically say what the condition is, which is you actually receiving the money. The fact that the title says conditional, but the body doesn't, means it's not conditional. And you must indicate the amount of money that you're actually expecting to receive, because if you put in $10 as the condition, well, if you get $10, then the condition's satisfied. So you need to specifically say, if you're expecting a $25,000 check, that the condition of this release is when you receive paid funds of $25,000. Finally, with respect to conditional releases, as a general contractor, you need to be careful about receiving and paying against conditional releases from subs, or suppliers to your subs. So if you're a general contractor on a project and you need to pay the electrician, if the electrician gives you a conditional release and you give the electrician the money, that release is good because you've now satisfied the condition on the face of the release. If there was ever an issue, you would say, well, the release is conditioned on receiving $25,000. Here's the canceled check for $25,000. Condition satisfied, the release is good. But if the electrician has to give you a release from their supplier, and that supplier's release is a conditional release, you don't have a direct ability to control that condition, right? So you write a check to the electrician, he gives you a conditional release from him and a conditional release from the supplier, but then he never pays the supplier. Now the supplier puts a lien on the job, makes a claim against your payment bond, and you say, wait, I have your release. And they say, well, it was conditional and I never got the money. And you're stuck. So what do you do as a GC when this happens? You have two choices. Choice number one is to require that they fund the supplier or otherwise give you an unconditional release from the supplier. Option two is to issue a joint check. So if you are presented with a conditional release from a supplier that is not in direct contract with you, you can say to the electrician, okay, electrician, I owe you $25,000. I'm going to issue a joint check, 20 to you and 5 to the supplier and you as a joint check. Therefore, I know that that condition on the supplier's release is satisfied. So be careful with that if you're a GC to make sure you don't fall into that trap. Next, using the wrong through date on your release. Also a big mistake that we see happen all the time. So then the question is, what through date should you use, and what if the through date and the payment amount don't match? So the through date is the effective date of the release. So it can be signed today, but have a through date of 2 months ago. If you recall in the presentation, that was the little box that had the through date. So I can sign the document today and say that the effective through date of this release is April 5th, March 9th, September 1st. I can make it any date that I want. Know that the through date is going to control over the payment amount. Let me repeat that because it's very important. The through date is going to control over the payment amount. Sometimes we have clients that say to us, well, I submitted a pay app for $100,000. They gave me $75,000 of it, so therefore I'm entitled to the other 25. I mean, because I submitted a pay app that said 100, right? And the answer is, if you've signed a release in exchange for that 75 and the through date is the end of the month when you were expecting 100 but only got 75, well, guess what? You just released $100,000 worth of your rights in exchange for $75,000. So what you need to know is that if the through date and the payment date don't match, then you need to change one of them or both of them, but you cannot accept it as is. So we have a client who's a plumber, and they were doing work for a general contractor. And it was a series of specific items over the course of several months. They wanted to make a partial payment against the total balance, which was $80,000, but they wanted the through date to be the last day he did work on the job. Well, our client, the plumber, recognized the problem and said, well, I can't take a partial payment and give you a release that's through the end of the month. I can give you a release that matches the payment. So if you only want to pay me $50,000, I need to now change my through date to match the period of time that $50,000 represents. So if $80,000 gets me to the end of the month and $50,000 gets me to the 22nd of the month based on how I did my work and my billings on the job, then that's what I have to change the through date to. So if the through date and the payment date don't match, then you need to make a change to one or both of them. So those were the three tricks that I see on a pretty regular basis, but I would suggest to you, there's one more, let's call it a bonus tip, that is a question that I get all the time. Why does the release say $10? I'm not getting $10. I'm not giving them $10, right? Why do I need to have a release that says $10? So let me explain what a $10 release is and why it, depending on when it's given and who you are in the construction process, to change. $10 releases are valid if you receive any type of consideration, and sometimes even if you receive no money. So let's talk about when a $10 release is no problem. You shouldn't think about it twice. You're a subcontractor on the job. You've sent your notice to owner early because you've signed the contract, but you're still waiting to show up on the job. You really haven't done any work. Now that the owner and the contractor have your notice to owner, they need a release from you, but you don't have any work. You haven't done anything. You haven't submitted any bills. Issuing a $10 release at that point is perfectly fine as a sub, right? It's going to say, we're going to pay you through, we're going to get a release from you because you issued a notice to owner. It'll cover a month of time, and it'll say $10 because I'm actually not giving you any money, but I still need a release from you. So that's a situation in which a $10 release is perfectly fine. If you're getting money, however, right, if I'm a sub and I'm expecting a check from the contractor, let's say it's $25,000, I would like my release to say $25,000, not $10. If I'm a contractor, right, if I'm giving money and getting a release, I would always like it to say $10. And the reason that if I was a contractor, I want to say $10 is that I don't want any argument later when the subcontractor comes to my office to pick up the check, or I mail it to him or her, and they say, wait, you only sent me $20,000, it should have been $25,000. If the release said 20 or 25, well, that's the consideration that was given. And if they're claiming more money, they may have an argument to say that you shorted the payment. However, if the release says $10 and you gave them 20 and they wanted 25, you would say, it doesn't matter because I gave you consideration that you thought was adequate. I said $10, I gave you a $20,000 check, the through date is the end of the month, we're done. So if you're a GC, you would like to have all your releases to your subs and suppliers say $10. It avoids a possible argument in the future that you shorted any payment. If you're a sub, I would suggest that what you'd like to try to do is scratch out $10 and put in the actual amount of the check that you are expecting to receive, right? So if you're got your release, you're expecting to receive $25,000, you show up and they only have a $20,000 check, now we have a problem. I was expecting a $25,000 check. That's what my release says, but you only gave me 20. I didn't get all of the consideration that was due to me to give you a release for this through date. The only other time that we see that a $10 release is acceptable is when a contractor may not want the owner to know what they're paying to the subs. So maybe a contractor has a lump sum contract with an owner, and they don't want the owner to be able to run through all of the releases, add up all the numbers, and realize, oh my gosh, I can't believe the contractor is charging me so much more than he's actually paying for this work. So they may want your release as a sub to be $10 so the owner can't add up all of the amounts associated with the project. The way to deal with that if you're a sub is to issue 2 releases, right? I will give you a release that has the amount on it. You're going to give me that money. And then once it clears, I'll give you a subsequent release and it'll say $10 for the same period of time. You can hand that to the owner if you want. And obviously you don't want to make any releases conditioned on $10 because if you only get $10, then the release is satisfied. Does anybody have any questions? Again, remember you can submit them through the GoToWebinar chat box. Ariella, if you're still there, if you can let us know if there are any questions.
We have one question so far. Should you accept a release with an exception on it?
So if you're a contractor or an owner and you get a release and someone handwrites in an exception or types in an exception or modifies the release and adds an exception, you need to determine whether or not that exception is something you're willing to accept. Maybe it is, maybe they're excluding a claim, an unpaid invoice. So I'm a supplier, I issue a release and I say, well, it's paying everything through this through date except invoice number 123. Well, when you receive that and you have an exception, you need to have an understanding of what that is to determine if you're willing to accept it or not. If it's something more broad, like excluding all claims for delays on the project, well, that could be a pretty big number, and you may not want to do that. So it's definitely a case-by-case basis. In my experience, most contractors generally take the position, if you modify my release, I am not accepting it. And again, this goes back to the idea of what does the contract require when you are reviewing and negotiating the contract. Any other questions, Ariella?
No, there are not any. There are no additional questions.
If you listen to podcasts and you want to learn more
okay,
about...
there actually is one more question. Sorry about that.
Okay.
It just popped in. What if the GC or sub-sub doesn't agree to the broad verbiage, which may result in your payment being withheld? What do you do?
So, this is a difficult question, right? So, I can tell you what your rights are in the law, but I don't have to pay your payroll when it comes due on Friday. So many times you have to make a business decision. Am I willing to stand on this issue, make a stand on this issue, knowing that it may hold up payments for me and lots of other people, and things are going to get worse before they get better, and I got to make payroll, and I have to pay my rent and insurance. So a lot of it comes down to a business decision. The best advice I can give you is, number one, by attending this webinar, now at least you understand what the documents look like, how they work, and what your rights are. And then number two is, when you negotiate your contract, try to deal with these issues up front. It's much easier to have this conversation at the time you are signing the contract and reviewing the documents than in the middle of the job when everybody is rushing to move the project forward, and any little hiccup slows things down, including hiccups related to changes in the paperwork. But if you've taken the time to understand your rights and make changes to the document, to the contract and the exhibits to the contract, then when it comes time to enforce your rights, you should feel secure in your ability to do that and say, I've made these changes, I'm not going to accept this broad form of release, or I'm going to insert these exceptions because they apply. But just know that it may be difficult. You'll get a lot of pressure from all of those people above you telling you that you're holding up the job, you're preventing other people from getting paid. I know that that's not much of a definitive answer, but there's no one size fits all answer to that question. If you listen to podcasts and you want more information, we publish a weekly podcast on construction, lien, bond, and collection topics. So you can get it on iTunes, Google Play, or Stitcher, or wherever you get your podcasts. We also have some other upcoming events. So the next seminar that we do about 5 seminars a year throughout the southern portion of Florida. It's a 3-hour seminar where we take a really deep dive into issues about getting paid, contract terms, liens, bonds, deadlines, exceptions, and rules. The next one is in Boca on October 16th from 8 to 11. You can go to sunraynotice.com/education to sign up for that. And we have this webinar once a month. The next one is titled, Can I Lien Homestead Property and Other Lien Questions Answered? We'll go through a series of questions that Ariella and I get on a pretty regular basis. So we'll answer those questions. It'll be a rapid fire Q&A of issues that a lot of people see when they deal with collections, liens, and bond rights. That's October 18th from 9 to 9:20. Again, go to sunraynotice.com/education to sign up.
If anyone has any additional questions, as you could see on the screen now, our email and our phone number, emails and phone numbers are in front of you. So feel free to write those down, and we will get back to you within the business day with any questions, with any answers or questions you may have. And I think that's it.
Great. Thanks, Ariella.
Thank you so much, and I hope everyone has a wonderful day.
Yep. Bye, everybody.